Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Collegium Pharmaceutical Inc. quarterly report. Collegium Pharmaceutical Inc. offers a range of medicines for pain management through its portfolio of products. The company's services include development and commercialization of central nervous system stimulants, treatment of attention deficit hyperactivity disorder, ADHD, with Jornay PM management of severe and persistent pain with Belbuca abuse deterrent. Extended-release oral formulations for pain management with Xtampza ER extended-release and immediate-release oral formulations for acute, severe, and persistent pain with Nucynta ER and Nucynta IR treatment of opioid-induced constipation in adult patients with chronic non-cancer pain with Symproic. Collegium Pharmaceutical's stock price surge. A year of growth in the past year, Collegium Pharmaceutical, Inc.'s stock price has increased by over 17.14%, driven primarily by strong financial performance. The company's robust third-quarter 2025 results, announced on November 3, 2025, were a significant catalyst for this growth. With net revenue of $209.4 million, a 31.4% year-over-year increase, exceeding analyst expectations, the stock saw an 11.6% jump in morning trading. The company's raised full-year financial guidance and surpassed earnings per share, EPS, also contributed to investor confidence. The positive earnings report led to an additional 11.24% surge in the stock price during pre-market trading on November 6, 2025. As a result, Collegium Pharmaceutical's stock reached a new 52-week high of $41.36 per share, with a year-to-date increase of 44.5%. The primary drivers of revenue growth or decline are multifaceted, influenced by both internal and external factors. Revenue growth is primarily driven by commercialization efforts, regulatory approvals, market size, reimbursement contracts, and the success of competing products. The company's ability to capitalize on these opportunities has led to significant revenue increases in certain product lines, such as Belbuca and Nucynta IR. Conversely, revenue decline can be attributed to various challenges, including competition from generic products, production issues, loss of distributors, regulatory actions, and unfavorable intellectual property litigation. The company's reliance on a limited number of suppliers and the potential for authorized generic agreements also pose risks to revenue growth. External factors such as macroeconomic conditions, geopolitical turmoil, and cybersecurity incidents can further impact revenue growth or decline. However, these factors are less directly related to the company's core business operations and more a reflection of broader market trends. Net income and profit margins shift in 2025 in a mixed performance. Net income exhibited contrasting trends between the 3-month and 9-month periods of 2025. During the first quarter, net income surged by $22,172, surpassing its 2024 counterpart. Conversely, for the 9 months ending September 30, 2025, net income declined by $10,747 compared to the same period in 2024. Profit margins also underwent changes during this period. In the 3-month span of 2025, both gross and operating profit margins increased, reaching 61.7% and 44.6%, respectively. However, for the 9 months ending September 30, 2025, these margins decreased to 58.2% gross and 20.3% operating. The reasons behind these fluctuations are not explicitly stated in the provided summaries. The company is indeed generating positive operating cash flow, as evident from the financial summary and detailed breakdown on pages 6 and 47 of its financial report. The net cash provided by operating activities has increased significantly from $120,336,000 in 2024 to $206,275,000 in 2025, indicating a substantial improvement in the company's ability to generate cash from its core operations. This trend suggests that the company is becoming more efficient and profitable, which is a positive sign for investors and stakeholders. The company's debt level has experienced fluctuations in recent years. While the current debt level decreased by 2.3% from $1,434,749, 2024, to $1,332,520, 2025, other liabilities such as deferred royalty obligations and lease liabilities have increased. Additionally, total debt levels have also risen, with outstanding debt reaching $822.8 million as of September 30, 2025. In terms of interest expenses, there has been a significant increase. The interest expense rose by 18% from $18,394, 2024, to $21,767, 2025, and total interest expense increased by 23% from $51,320,000 in 2024 to $63,020,000 in 2025. These changes indicate a notable increase in the company's debt-related expenses. Management is optimistic about the company's outlook, aiming to commercialize and grow sales of its products. However, their strategy is dependent on regulatory approval to increase market acceptance. The company has sufficient cash to fund operating expenses for the foreseeable future, but anticipates significant future capital requirements due to manufacturing, debt repayment, royalties, and other obligations. Management also expects increasing pressure from third-party payers to offer larger discounts and rebates, as well as potential legislative and regulatory changes affecting the healthcare system. Despite these challenges, the company remains committed to building a leading biopharmaceutical company focused on treating serious medical conditions, with an emphasis on developing and acquiring differentiated products. The company has made significant moves through acquisitions and divestitures in recent years. Acquisitions have been a key part of the company's growth strategy, with notable examples including the Ironshore acquisition in September 2024. This acquisition marked the purchase of Ironshore Therapeutics Inc., further expanding the company's capabilities. Additionally, the company acquired Biodelivery Sciences International, Inc., BDSI in March 2022, allowing it to tap into new markets and revenue streams. On the other hand, the company has also engaged in divestitures as part of its strategy. One notable example is the Master Settlement Agreement, which resolved 27 pending opioid-related lawsuits for a total payment of $2.75 million. This move allowed the company to put these costly and time-consuming lawsuits behind it, freeing up resources for other priorities. Overall, these acquisitions and divestitures demonstrate the company's commitment to strategic growth and risk management. The company's financial summary reveals that it has engaged in share buybacks, indicating a strategy to return value to its shareholders through the reduction of outstanding shares. This move suggests a focus on maximizing shareholder wealth and potentially boosting stock price performance. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. The company faces challenges in securing adequate supplies of active pharmaceutical ingredients and managing relationships with licensors. Limited supply of APIs for certain products may lead to unmet demand and decreased prescribing. The reliance on single manufacturers, such as Patheon, and limited vendors increases the risk of production volume difficulties, technical issues, and natural disasters disrupting manufacturing. Additionally, shortages of qualified personnel, raw materials, or replacement parts/equipment can further exacerbate these concerns. Global supply chain disruptions caused by geopolitical turmoil, trade policy changes, and tariffs also pose a threat to the company's operations. Shipping delays, higher prices from suppliers, and reduced availability of materials are potential consequences of these disruptions. Furthermore, the dependence on wholesale pharmaceutical distributors for retail distribution introduces risks of loss or disruption, impacting the financial condition and results of operations. Overall, the company must address these concerns to mitigate the risk of inventory buildup and supply chain disruption. That concludes the financial summary for Collegium Pharmaceutical Inc. Feel free to comment below, and I will be happy to answer them when possible.